Hello, Maverick traders, and welcome out to your daily currency recap. This is Sonkin today, and let's break down today's market price action. It's a Wednesday, January 15th. Can't believe we're already halfway through the month, but let's go through it. Exciting day in the markets, but as always, we'll be breaking down today's market price action by looking at broader markets, take a look at what the news was, what moved on currency baskets, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we jump into the market analysis, let's just jump right into the headlines and the numbers, and let's just take a look at the news of the day today. And you can see the market rallied higher. So, we had seen a rough start in the equities, a lot of back and forth, but today was a nice strong day across the board. And again, this came off after the inflation number that came out weaker than expected. So we saw a move across the board where equity rallied, we saw the bond yields pull back, and we saw the dollar pull back. So that was the story for the day, and it was a good day in the markets as far as the risk sentiment goes. Now, here we are with the percentage change, as you can see that we don't really see that excitement in the currency movements. But again, you can see that this was more intraday movement, but dollar is down. We are seeing, things are slightly down. Euro is down. So the only thing that's really popping up, and that's again the Aussie. Remember, Aussie was one of those weaker currencies for the last month, even the last 2-3 months, but now you're seeing the Aussie actually doing a little bit better as far as the price action goes. And since the equity markets are strong, the risk sentiment is strong, the Aussie is actually leading the board here. So we'll be taking a look at some of the Aussie pairs, but outside of that, you can see Kiwi is not taking part in that sentiment, but we'll see if the Kiwi catches up to it. We definitely noticed the weakness in European currencies. That remains the same. But outside of that, you can see that as the dollar pulled back, yen rallied. So there's a bit of a divergence between the dollar and the yen currency pair. So overall, it was a decent day. But I think what I'm looking forward to is what kind of follow through we get in the next 24 hours, especially in the US dollar. Now, let's just take a look at the global markets, and you can see S&P up 1.83, World Stock Index up 1.48, and then we're seeing a nice movement in the crypto markets. Gold was higher, oil was higher, so pretty much a good movement across the board. Now, if you take a look at the currency market and see Ethereum actually did the best, we'll be paying attention to the Ethereum here, but overall, you can see all the crypto markets are equally doing well, which again seems indicates to the whole market sentiment that we're seeing a positive shift here. Now, as far as the outlook goes, we are back at zero now. So this is where, again, if anybody's trying to figure out why the trends are not developing, we see a big change at the beginning of the year. It's not happening. But take a look at the markets. There's a lot of indecision here. When you see these big candles down, these are negative sentiment. And when you see these big candles up, they're positive sentiment. You can see that so far we have, a couple of big events to the downside. Here we are, a couple of big candles to the upside. And then if you take a look at the range, we are in between that range. So this is why we are not seeing the risk trends develop. We're doing a lot of back and forth. And, even with this strong price action today, we are not broken out of that resistance yet. So we probably stay range bound until we really clear some key levels out. So that's really where we are. We'll change our outlook when we see a change in the markets. But this is that range bound where, there's a strong resistance, there's a strong support, and prices are kind of moving in between. Now, if you take a look at the numbers, again, so far you can see yesterday we had the PPI that was below expectation, and then here we are, CPI today that was below expectation. So that's, again, should provide some relief rally, should help you pull the yields down, and that should weaken the dollar as well. Now we'll see what happens, because I'm not really seeing dollar falling apart here. So dollar still kind of holding those levels, but again, we're going to look for and see what kind of movement that we get, or follow through we get in the next 24 to 48 hours. Remember, we still have some data to go through. Tonight, we have the Aussie employment data, and then followed by tomorrow, we have GDP, U.S. retail sales. And I think that retail sales number is the next important event out of the U.S. So if you're looking for trading the dollar, I think that's another one to pay attention to. So based on that, let's just jump into our currency analysis and let's just take a look at where things are as far as the velocity score goes. And you can see that there's a whole lot. We're seeing the pound and the Kiwi kind of taking a break in the middle here. Dollar is a -1. So really the things that are standing out is the Aussie. So we'll take a look at Aussie pairs, pair that against the Euro, Swiss franc, and even if it does take a look at the CAD as well. Now, these are the ones that are moving. We'll also take a look at the yen and see how yen is moving here. So let's just jump into possible trades ahead and let's take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at those possible setups ahead, let's just start with the US dollar. So this is what I want to point out. So here we are with the dollar, this epic run at some key levels, and I've talked about how important this level is. I mean, this is a monthly chart, so I'm going really long term here. You can see that the last time on this basket level, we were here just around that 2000, and here we are, 2022, when we had that big inflation rally, and then here we are back again. So these are key resistance level. But that doesn't mean that we should just, look at just shorting the dollar here, because we need to see a lower high and a lower low to make that turn. So on the daily chart, you can see that we are still supported by this 13th exponential moving average. We did found support. Remember, we didn't really close at the lows of that candle. We did rally. But we are seeing a nice little pullback, 3-day pullback. So at this point, again, we are at the support level. What I'm looking for, maybe a little smaller, weaker rally and maybe turn that lower, and that will give us a confirmation the dollar wants to roll lower. On the 4-hour chart, you can see that the momentum is slowly sort of coming down here. A day like today, I would have loved to see the dollar being sitting at the lows of the day, but that's not the case. So we just have to respond to the price action. I also want to take a look at the bond yields. So this is a 10-year bond yield. You can see that was a big, massive drop today. So, and that one will look more weaker. The bond yield look more weaker. We got a big drop here. We kind of stayed lower for the rest of the day. So I think it's important to pay attention to the yields here, because if the yields continue to pull back lower, I think that's going to eventually drag the dollar down as it's holding up. I think the dollar, I do like to short maybe off this bear rally, but again, it's not really rolling over yet. So this is a mild bearish price action. So you have to be very careful when you're shorting the dollar, because when something falls down and keep rising, now that's not a good sign. Now, if something falls and stays weaker, now that's where, relative weakness is. So maybe there's a bit of a lag or a delay there. Now, talking about things that are holding lower, here's the Swiss franc chart. You can see that this thing, I really like European currency short here, and that continues to be the case here. And again, taking a look at the daily chart, you can see that this is the level. This is the chart that I'm looking at. Right now we are under a pressure on this chart here. You can see that we are below the exponential moving average. So I think probably continue moving lower. And ultimate test will be when it gets to the support level. So I still like Swiss franc to the short side. I like Euro over here. Nice little rollover today. The British pound, you got to take a look at the chart here and see, well, maybe this is coming to a short-term support level. So this support level has held in for the last few months. So maybe look for a bear rally to short into. I think that's really what I'm seeing a setup here. Pound has been a great short. Maybe taking a little pause here. Maybe that will get swapped out by the euro. Now the Canadian dollar, you can see that it got a double top right here. It's no longer, it's still in an uptrend. We still have the exponential moving average to the upside. So until that level is broken, I still like it to the upside. I know 4-hour chart probably suggests that it's kind of weakening here, but we need to see a confirmation on that one. So what I really like here, again, look at the Aussie. Remember, this thing has been beaten down quite a bit, made a few bottoms over here. So right now it's making higher lows and higher highs. So here's it's making a lower low. A trend change is where it make it higher high, higher low. It didn't make a higher high from from this level. Made a higher high here, higher low. It made another higher high here. So I do like how the Aussie sort of turning around here. This is the daily chart. You can see that it still has a lot of resistance to kind of go over. But as soon as it really start to break out higher, the RSI is picking up as it breaks above. I think this can slowly catch direction, especially if the equity markets recover. So Aussie is the one that I really like here. And the Kiwi, you can see, is kind of stuck in the rut over here. On a 4-hour chart, let's see. No, I don't really like the chart here. So Aussie's the one. But remember, Aussie has an employment report this tonight. But the pairs that I'm looking at based on what we just looked at, first one, Euro Aussie. I really like this on a daily chart. You can see that this thing is, we've been above this exponential moving average, broke that trend, went sideways for a bit, and here we are breaking lower again. So on a daily chart, it looks beautiful setup here. 4-hour chart, you can see it's running right into support here. So perhaps a break below that. And again, I like the next level of target will be right around here. So the risk to reward ratio looks good over here. So Euro Aussie goes at the top of my list here. Aussie Swiss franc will be the next one. And you can see this thing has been in this downtrend below the exponential moving average, went sideways, and finally we're seeing an uptick in the RSI here. The parabolic SAR is above. So this one again, I like it further to the upside as well. So again, these are probably slow moving pairs, but that's really what we are seeing as far as the direction goes. So those are the two that stand out the most. I know some traders are doing really well with those pound Aussie, pound Kiwi short, and they still look short. Again, now with that extension, maybe there's a little bounce coming in here and there. But again, overall, I think those probably stay weak as well. Pound Kiwi, same boat here. But again, we're looking for, is the euro better or the pound better? Right now, let's just take a look at the euro pound. So look at the rollover here. This is a strong resistance level in euro pound. We rejected the level pretty nicely here. And if it does pull back for the next 2 to 3 days, that's what we want. We want to capture, is the euro going to be leading or the pound? And I think in this moment here, euro could be weakening here. So that's the one that's why we chose Euro Aussie and Euro, the other Euro currency pairs. Now here we are with the Euro Swiss franc. You can see that this thing is sideways here. So really not seeing a whole lot between the Euro and the Swiss franc. So I think Euro Aussie goes on the top list, and Euro, and then we can take a look at Aussie Swiss franc. I also want to address that here, the dollar. If you do attempt to trade the dollar, this is the Aussie dollar. You can see that this thing has been nicely below the moving average, and at some point, we could have had a bigger of a shadow here, upper shadow. But again, it seems like we closed above that level here. So if this is going to turn around here, this probably be a good buying opportunity. Again, dollar is a bit of an aggressive play because dollar is not the weakest. It's mildly bearish, not that much more bearish than we're looking at other currencies. But keep that in mind. This is where you can diversify your risk by among the euro or the Swiss franc, or like if the Aussie is the play, you can spread that risk among other currency pairs. But so that's a game plan here. Again, we had a big day today, looking for market to digest all the news, and then we'll see where we have a follow through. And based on that, we can see where the dollar goes. We'll see where the Aussie goes. We'll also pay attention to the euro as a relatively weak currency. That's the game plan. Thanks for joining. Happy trading. See you in the next one.